Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a filing from AiXin Life International, and let me tell you, it's a bit like trying to understand the menu at a really complicated health food restaurant. You see some familiar words, but what do they actually mean together? This report has some twists and turns, especially when it comes to its structure and operations in China. This filing is an amendment to their registration statement. The key takeaway, AiXin Life is planning a public offering of common stock, aiming to raise $10 million, but there are some major complications related to Chinese regulations that we will discuss, and other things that an investor should be aware of. First, some formalities. This document was officially filed with the SEC on April 15, 2025, and is amending a previous filing. The company is registered under number 333268190 in case you want to look up the older filings. What we have here is not the initial filing, but an amendment, specifically Form S1 NEN, amendment number 8 to be exact. The name of the company we will be looking at today is AiXin Life International Inc. The company is incorporated in Colorado, and if you are wondering what their business code is, it's 549. The company's headquarters are located in Chengdu City, Sichuan Province, China. Their phone number includes the Chinese country code CFLOF 86. Now, who are their lawyers for this filing? It looks like they're using Vincent J. McGill and Louis Bevilacqua. The company hopes to start selling shares to the public as soon as the SEC says it's okay. Now, what kind of company are we dealing with? Checking the boxes, it's a non-accelerated filler, a smaller reporting company, and not an emerging growth company. This tells us a bit about their reporting requirements and size. Keep in mind, the information in this prospectus is not complete and may be changed. We may not sell these securities until the registration statement filed with the US Securities and Exchange Commission is effective. AiXin Life International Inc. is offering 2,500,000 shares of common stock. The public offering price is expected to be $4 ROCS per share. This offering is being made on a firm commitment basis by Busted Securities LLC. This means the underwriter Busted Securities is committed to buying all the shares regardless of whether they can sell them to investors. This gets a little complicated. While you're buying shares of AiXin in Colorado, the actual business operations happen through companies in China, something like Chengdu AiXin Zhonghong Biological Technology. These companies are owned through layers of intermediary companies, first in Hong Kong and then in the British Virgin Islands. This holding company structure creates risks for investors. Chinese regulatory authorities could disallow our operating structure, which would likely result in a material change in our operations and or the value of our common stock, including causing the value of our common stock to significantly decline or become worthless. The business is subject to legal and operational risks associated with our business operations in China and our holding company in Hong Kong, including risks related to the legal, political, and economic policies of the PRC government, the relations between China and the United States, or Chinese or United States regulations. And here's a big one because of the new regulatory rules by the CSRC, the China Securities Regulatory Commission. They will have to submit filings to the CSRC, and the CSRC must complete its review of such filings and grant its approval before this offering is completed. Because of an investigation of Quan Zhonglin, our chairman and chief executive officer, our PRC council has advised us not to submit our application to the CSRC at this stage, and that it would not be able to issue an opinion on certain PRC law matters for this offering unless conclusive documents from the local authorities confirm that the investigation has been concluded. As a holding company, our ability to pay dividends to our shareholders may depend upon dividends paid by our PRC subsidiaries. Now we get to a very important thing in reports like these, and it's transfers of cash to and from our subsidiaries. We're talking about how easily money can be moved around within the company structure. It turns out the Chinese government puts restrictions on this. To the extent the company has cash in one of our Chinese operating companies or AiXin HK, the funds or assets may not be available to fund operations or for use outside of mainland China or Hong Kong. Here's some good news though, their auditor, YCM CPA INC, is not headquartered in mainland China or Hong Kong, and it was inspected by the PCAOB in 2023, which means the SEC can fully see their work and not have to make assumptions like with other China-based businesses who use auditors in China. There is a limited public trading market for our common stock. We have applied to list our common stock on the Nasdaq Capital Market under the symbol AXNN. Investing in our securities involves a significant degree of risks. You should carefully consider the risk factors beginning on page 15 of this prospectus and set forth in the documents incorporated by reference herein before making any decision to invest in our securities. Okay, so what is this company actually about? The business is focused on being a leading brand of nutritional supplements. Their primary goal is to develop recognized brand names with a reputation as a provider of quality health and wellness products, which deliver demonstrable benefits to our customers. Product development and innovation is also a priority. The scientists, nutritionists, and quality control experts all work at the Yunnan Research and Manufacturing Facilities. A key differentiator to their marketing strategy is the continued development of well-trained team members that work closely with customers. Okay, so let's take a look at that important section, risk factors. First off, they operate in a highly competitive industry against larger, well-capitalized companies. They've got a limited operating history, only entering the health and wellness market in 2017. And like any company, they face the challenge of anticipating consumer preferences, what's hot and what's not in the health food world. If they misjudge the market, they could end up with a lot of unsellable product. There are uncertainties and risks related to their recent acquisition. Yunnan Runkongshan is a completed acquisition that is subject to uncertainties and risks. Resources devoted to product innovation may not yield new products that achieve commercial success because product development is uncertain and takes money. If they do not successfully develop and maintain a robust omni-channel experience for our customers, their business and results of operations could be materially and adversely affected. If they fail to develop and protect our brand names and reputation, we may not attract and retain new customers, which could adversely affect our revenues and financial performance. Unfavorable publicity about us or consumer perception of our products, the ingredients they contain, and any similar products distributed by other companies could cause fluctuations in our operating results and could have a material adverse effect on our reputation, the demand for our products and our ability to generate revenues, and the market price of our common stock. A significant disruption to our timely receipt of raw materials and inventory could adversely impact sales and operations, or increase our transportation costs, which would decrease our profits. Our business depends on the continued contributions made by Mr. Kwanjong Lin, our key executive officer. The loss of his services may result in a severe impediment to our business. The PRC government has significant oversight and discretion over the conduct of a PRC company's business operations, or to exert control over any offering of securities conducted overseas and or foreign investment in China-based issuers, and may intervene with or influence our operations, may limit or completely hinder our ability to offer or continue to offer securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the value of such securities to investors, and may cause the CSRC, that's the China Securities Regulatory Commission, has released trial measures which require Chinese companies to complete filings with them if they do an overseas offering and listing of their securities. The confidentiality and archives provisions may limit the activities of or disclosures made by companies in the PRC, which directly or indirectly list their securities overseas. We could be subject to conflicting demands placed upon us by regulatory authorities in the United States and the PRC, which could result in disciplinary actions if not resolved. You may have difficulty enforcing judgments against us. Changes in the policies, regulations, rules, and the enforcement of laws of the PRC government may be quick with little advance notice and could have a significant impact upon the business we may be able to conduct in the PRC and the profitability of such business. Our business may be subject to a variety of PRC laws and other obligations regarding cybersecurity and data protection. PRC regulations relating to investments in offshore companies by PRC residents may subject our PRC resident beneficial owners or our PRC subsidiaries to liability or penalties, limit our ability to inject capital into our PRC subsidiaries, or limit our PRC subsidiaries' ability to increase their registered capital or distribute profits. We may be treated as a resident enterprise for PRC tax purposes under the PRC Enterprise Income Tax Law, and we may therefore be subject to PRC income tax on our global income. Restrictions on currency exchange may limit our ability to utilize our PRC revenue effectively. Introduction of new laws or changes to existing laws by the PRC government may adversely affect our business. Substantial uncertainties exist with respect to the interpretation and implementation of the newly enacted foreign investment law, and how it may impact the viability of our current corporate structure, corporate governance, and business operations. We may rely on dividends and other distributions on equity paid by our PRC subsidiaries to fund any cash and financing requirements we may have, and any limitation on the ability of our PRC subsidiaries to make payments to us could have a material and adverse effect on our ability to conduct our business. PRC regulation of loans to and direct investment in PRC entities by offshore holding companies, and governmental control of currency conversion may delay or prevent us from using the proceeds of this offering to make loans or additional capital contributions to our PRC subsidiaries, which could materially and adversely affect our liquidity and our ability to fund and expand our business. Prior to this offering, we had a limited public market for our common stock, and you may not be able to resell our shares at or above the price you paid or at all. The sale or availability for sale of substantial amounts of our common stock could adversely affect its market price. The market price of our shares is likely to be highly volatile, which could result in substantial losses to investors. We may never be able to pay dividends and are unlikely to do so. Trading in our securities may be prohibited under the Holding Foreign Companies Accountable Act if the PCAOB is unable to inspect our auditor. Alright, let's talk about some key limitations imposed by the People's Republic of China. As confirmed by their PRC Council, neither we nor our subsidiaries are currently required to obtain approval from any Chinese authorities before completing this offering and listing our common stock on Nasdaq other than the approval required from the China Securities Regulatory Commission, or CSRC. Let's also not forget that a number of individuals accused Quanzhong Lin, our chairman and chief executive officer, acting through Sichuan AiXin Investment Co. Limited and Chengdu Asian E-Commerce Co. Limited, entities controlled by Mr. Lin, of raising funds illegally. Alright, with all those risks spelled out, let's look at what the plan is with use of proceeds. Our proceeds from this offering are expected to be approximately $10,000 before payment of the underwriters' commissions and other expenses. We intend to use the proceeds from this offering for the purchase and sale of raw materials and developing our own brands, including working capital and general corporate purposes sale. We can intend to use the proceeds from this offering for the purchase and sale of raw materials and developing our own brands, including working capital and general corporate purposes, to get $2.3 million, satisfaction of a portion of accrued liabilities at $1.4 million, purchase of raw materials and supplies at 7 of the portion of accrued liabilities at $1.4 million, purchase of raw materials and supplies at $750K, fund existing businesses operations such as product design and manufacture at $500K, expansion of manufacturing facility at $1.35 million, satisfaction of a portion of accrued liabilities at $1.4 million, purchase of raw materials and supplies at $750K, fund existing businesses operations such as product design and Okay, let's look at the capitalization table. This is where we can extract some raw numbers. Cash and cash equivalents is currently at $568K, but pro forma we can expect it to be around $8.7 million. Accounts payable are at $725K, which makes cash liquidity very low. Loans from third parties are very small at $85K. However, what should worry investors is the accumulated deficit or debt of approximately $18.5 million. This does not get erased by this offering. Total stockholders' equity deficit comes to a $3 million deficit right now, but will hopefully be $5 million after this offering. What about dilution? Dilution describes the reduction in the ownership percentage of a stock as more stock is issued. After accounting for this offering, there's an immediate dilution of 372.75 share for new investors. Let's look at some information on AiXin itself on the market. Our common stock is currently quoted on the OTCQB under the symbol AiXin. The last reported closing price for our common stock on April 14, 2025 was $0.041910 per share. The company has applied to list on the Nasdaq Capital Market. Here's a brief look at the income statements. Total revenue net was around 4.08 million, up $1 million from the previous year. Cost of goods sold was 1.6 million, resulting in a loss from operations of 249.8 million, and a non-operating income to push back a good portion of the losses, resulting in 427k. The previous year had a huge 3.79 million expense. Income tax expense was minimal at 19k. The net loss came out to 2209 million. Now to look at management's discussion of what these numbers mean. Revenue was $3,120.6115 in the 9 months ended September 30, 2024, compared to $3,027.689 in the same period of 2027, $71,074 or 5%. Our direct sales revenue was $625.132 for the 9 months ended September 30, 2024, compared with $1,064,668 in the same period of 23 and $1,068 in the same period of 23, representing a decrease of 41%. Our pharmacy revenue was $764,495 for the 9 months ended September 30, 2024, compared with $802,182.107 23 of 2023, representing a decrease of 37,623 resin for found head A. Our hotel revenue was $465,423 for the 9 months ended September 30, 2024, compared with $892,423, representing a decrease of 423, representing a decrease of 426,986 or 423 for and manufacture and sales revenues at Rankongshan were $1,265,565 for the 9 months ended September 30, 2024, compared with $538,494 for the same period of 2023, representing an increase of $727.71 going through how percent. Cost of goods sold was $1,163,640 to the 2,649 for the same period of 2023, an increase of 27,229 or 2%. Loss from operations was $492.16 $40,629 T-Hughes and $30.91 compared to $1,391,391.993 in the same period of 2023, an increase of $100, $661, 7%. Non-operating income was $166,612 for the 9 months ended September 30, 2024, compared to $332,386 for the 9 months ended September 30th, 2024. We had interest income of $5T offset by other expenses of $4,835 and other income of $172 and other income of $174 and other income of $170,610, partly offset by other expenses of $4,813 of $30.25 and other income of $170,900, $170,900 re-54 compared to 30/20/24. We had interest income of $525,069, partly 55, and other income of $174,069, partly $5,069, partly offset by other expenses of $4,081. Income tax expense was $527 and $5,879 for the 9 months ended September 30th, 2024 and 2023, respectively, a decrease of $5,352, respectively, a decrease of $5,352,023. Our net loss for the 9 months ended September 30, 2024 was $1,326,565,400 net loss of $1,065,486,486 for the same period of 23. An increase of $283 or 25%. They have a limited operating history as they first entered the health and wellness business in December 2017. You may experience difficulties in effecting service of legal process, enforcing foreign judgments, or bringing actions in China against us or our management named in the prospectus, based on foreign laws including US court judgments based on violations of the civil liability provisions of the US federal securities laws. Our common stock may be delisted under the Holding Foreign Companies Accountable Act if the PCAOB is unable to inspect our auditors. The delisting of our common stock or the threat of their being delisted may materially and adversely affect the value of your investment. You must rely on price appreciation of our common stock for return on your investment. In October 2023, a number of individuals accused Mr. Lin, acting through Sichuan AiXin Investment Co. Limited and Chengdu AiXin Ev as Enfine AiXin Investment Co. Limited, entities controlled by Mr. Lin, of raising funds illegally. The company's counsel has advised them not to submit their application to the CSRC for this reason, son. So what's our take on all of this? On one hand, AiXin Life is clearly trying to tap into a growing market for health and wellness products in China. With their multi-channel approach and manufacturing capabilities in Yunnan, they have a lot of possibilities to make unique products and get sales going. But there are significant challenges and this business has a lot of red flags. Their financial performance has been inconsistent. They are suffering significant losses and need to manage the issues surrounding their CEO. The heavy hand of Chinese regulation poses a big risk, potentially disrupting their structure and the offering itself. As Warren Buffett would say, risk comes from not knowing what you're doing, and it seems very little is actually known about these companies due to the complexities imposed by the business and the country. Rikem, this would be one to avoid until things start to clear up, or at least wait for more concrete information. If you found this helpful, please like, subscribe, and let us know what other companies you want us to decode in the comments below.